For the first time since January 2022, the People's Bank of China unexpectedly cut the medium-term lending rate, which it uses to give one-year loans to the banking sector, by 10 basis points to 2.75%. This move highlighted Beijing's concern over declining consumer demand. According to fresh information disclosed after the central bank's decision, the nation's economy narrowly avoided contracting in the second quarter as consumer and industrial activity slowed in the face of persistent pandemic lockdowns. Here in this video, we will discuss desperate situation of China economy. The video is going to be very interesting, so make sure you stick to the end. Before we continue to our video, make sure to smash the like button, subscribe to our channel, and hit the bell icon to never miss any of our future uploads. Now let's get started. Although much less than anticipated, retail sales and industrial production increased, and the youth unemployment rate reached a record high of 19.9%. Beijing's zero-COVID policy and a downturn in exports are projected to significantly impede growth in the second half of the year. The dismal report caused Chinese equities to drop, diverging them from rising equity markets in other significant nations like the US and undermining investor confidence in the future for the entire world. In Shanghai, authorities are testing drones to make sure citizens scan their health codes on a required smartphone app, dubbed digital shackles for their use in social control, before entering a building. Several Chinese cities are currently facing new or extended lockdowns. Weakened sales of high-end products, such as the market for used luxury watches and bags, have drawn attention to eroding consumer confidence. While the market for chips used in smartphones and consumer gadgets has fallen, rising geopolitical tensions are also deteriorating the outlook for sectors like semiconductor production. Chinese investors have been looking for alternative assets like jade as a result of market sell-offs and extensive defaults in the country's struggling real estate market, while cash-strapped customers have begun a new craze for soon-to-expire food. According to figures released, inflation is still at its highest level in 2 years, although being lower than in other major nations. However, rigorous quarantine laws and lockdowns continue to be the main causes of the new pessimism. For instance, international schools in Hong Kong are having trouble finding teachers in time for the start of the new school year. Xingyong Chen, an economist at BNP Paribas, asserted that China is undoubtedly in a really grave situation. At the moment, there's no real demand. There won't be any demand if you don't let people go out and consume. Importance of China economy. China's membership in the WTO in 2001 made it easier for it to integrate into the global economy. In recent years, China has replaced the US as the center of the global trading system. Apple and Tesla are two significant global companies having factories in China. China's contribution to global exports surged fourfold from 4% to 15% last year. The percentage fell in the US. On the other hand, China outperforms the US in one more area. It has ascended to the top of the list of the world's economic systems based on the purchasing power parity criterion. However, the COVID-19, which dealt a severe blow to the global economy, also had a significant negative impact on the Chinese economy. China today serves as the hub of the global supply chain for electrical goods. Reasons of China economy crash. 1. China can't learn to live with COVID. China has not dealt with COVID-19 as successfully as the rest of the world has. Therefore, there would be economic unrest if the virus were to abruptly spread across the country. According to Jacob Gunter, there isn't any developed immunity because China has refused to import the vaccines. They don't have a very developed healthcare system, and there is a lot of vaccine resistance. The subsequent government assault on debts owed by real estate developers is even worse. Chinese investors stopped paying their mortgages on incomplete apartments. According to Craig Botham, the property crash is a bigger issue than the zero-COVID policy. 2. Accelerating credit growth. China has not dealt with COVID-19 as successfully as the rest of the world has. Therefore, there would be economic unrest if the virus were to abruptly spread across the country. According to Jacob Gunter, there isn't any developed immunity because China has refused to import the vaccines. They don't have a very developed healthcare system, and there is a lot of vaccine resistance. The subsequent government assault on debts owed by real estate developers is even worse. Chinese investors stopped paying their mortgages on incomplete apartments. According to Craig Botham, the property crash is a bigger issue than the zero-COVID policy. 3. Chinese economic meltdown and the rest of the world. It would be incorrect to state that China will be significantly impacted by the IMF updated growth projections for 2022. The organization lowered its 3.6% to 3.2% growth prediction for the world economy in 2022. This negative revision is thought to have been mostly caused by the recession in China and Russia. The IMF also forecasts that a crisis in China will have a big impact on the entire world. This situation was previously there during the COVID-19 days, so if the flow of commodities from China slows down, it may result in higher costs for consumer items everywhere. Overall, the financial markets would suffer from the weaker global economy. Can it cause a global economic crash? China's economic issues, which are already exacerbated by Beijing's strict zero-COVID rules and the weakening of global development, are made significantly worse by the country's property problems. According to some estimates, real estate makes up 30% of GDP, which is twice as much as it does in the US. Although some observers think the market has bottomed out, the sector's problems are anticipated to last for some time. A worse decrease than that saw during the 2008 financial crisis. This was predicted by S&P Global Ratings in July for a 30% decline in real estate values this year. According to Tenios Wildau, that's simply a massive portion of the economy that's kind of underwater now. I believe that even maintaining our current pace would be unsustainable. If this trend continues, growth would be well below target for this year. According to Alicia Garca-Herrero, the chief Asia-Pacific economist at Natixis in Hong Kong, the global economy is not thought to be at a high risk of the kind of financial crisis brought on by the collapse of Lehman Brothers in the United States because Chinese real estate developers hold relatively small amounts of foreign debt. The global impact is mostly due to very low growth from China. It's not so much a financial impact. Garcia-Herrero told Al Jazeera, of course, if Chinese banks finally can't swallow the shock and their non-performing loans increase massively, and there's a financial crisis in China, which I don't think will happen immediately. It will be more like Japan in the 80s and 90s. So saddled with bad loans, no credit, the economy doing very poorly, deflation. This is, I think, the scenario. So not an immediate Lehman type event. However, a significant slowdown might still have a significant impact on global growth due to China's size, which accounts for approximately 1/5 of global GDP. An economic collapse of that magnitude is unlikely to occur in China. Analysts believe that it may be headed for a long decline that slows down global growth in the upcoming years. They can simply order the banks to lend, giving them the power to avert financial contagion and a total collapse in credit flows. They can operate outside of the formal bankruptcy system to maintain liquidity and prevent disorganized default chains. However, Wildau warned that after decades of rapid economic expansion, China could yet be in for years of economic stagnation, which would feel to many Chinese like a recession. What is China doing about the crisis? We expect additional funding will be arranged to support the completion of unfinished houses. Wu, the Oxford economics economist, said in a note. Beijing has made it clear that, despite its desire to lessen the economy's reliance on the sector, supporting the real estate market is a crucial duty. Officials stated the need to stabilize the real estate market at a meeting of China's top decision-making body in July, stressing that local government should assume responsibility for ensuring that pre-sold properties are finished. Chinese news site Caixin claimed earlier this month that Beijing was getting ready to loan 200 billion yuan, $29.3 billion, to finish and complete housing projects. In addition, Beijing has implemented policies to stimulate the economy more broadly, including the announcement this week of 300 billion yuan, $44 billion, in additional credit through its state-run policy banks. Other policies include decreasing interest rates and implementing stimulus. Hope you guys enjoyed our video. Make sure to subscribe to our channel and hit the bell icon for more videos. Thanks for watching and have a wonderful day.